What's going on, ladies and gentlemen? Welcome back to another video. So today we're going to be showing you guys a super simple tip to helping you find potentially good penny stocks to trade, or penny stocks that are probably going to continue going higher on the day. So after trading for so many years and using TD-Ameritrade's platform, there kind of was this little similarity I ended up finding between penny stocks on TD-Ameritrade's platform, and more oftentimes than not, they end up performing pretty well. So I'm going to share the screen here in just a second, and then I'm going to highlight exactly what it is I'm talking about. All right, are you guys ready for the magical tip and secret? It's this right here. I'm going to highlight that. You may not actually be able to see it on the video because the print's very small, so I will write it out for you. What I just circled or put in that little box there, it says ETB. That stands for easy to borrow. That little ETB on the upper portion of the screen on the particular stock MEET stands for easy to borrow. Now what that means is this stock is easily available to short, meaning you can sell the stock short or bet that it's going to go down. So if you're not familiar, haven't been trading for that long, not only can you buy stocks for them to go up in price, but you can also sell stocks hoping that they go down in price and also make a profit. So it's selling short is really the same thing as buying long. It's just the exact opposite. And instead of making money when a stock goes up, you're making money when a stock falls. And if you're not or haven't been trading for that long, something you may not know is typically like 80-90% of all penny stocks that end up popping up on the day typically end up fading or kind of crashing or going down the same day. So it's a very sought out strategy to short sell or sell short on penny stocks, because 8 times out of 10, they end up kind of flopping over and end up being a dud on the day. Rather than running, they end up crashing. So now let me delete these drawings off and we'll just kind of go through and explain a couple things for you guys. So we're going to look at the stock over the past 5 days. So this is the penny stock MEET over the past 5 days. And you can see from the initial day where it popped up and kind of spiked, it kept going. And it's been going since. Typically, what we'll see is a penny stock pop up, go for a nice run, maybe a second one, and then it'll kind of crap out and then fade out on the day. The next day it'll be like this, and it'll come back down. It'll look like that. And it won't look like this. So what is the tip here? Really, the tip is, whenever you come across a penny stock that is starting to pop up on the day and you're considering trading it, if you're on the TD-Ameritrade platform, double check in this little bar here to see if it's easy to borrow. And the way you get about finding this symbol, this ETB, is by opening up the active trader window. See, if I close this, it'll go away. When you open up the active trader window, if it's easy to short, the ETB should pop up right there. Okay, so again, by opening the active trader tab, it'll go away. By clicking it, it will display it if it is easy to short. Most of the time, your penny stocks that you're looking at on TD Ameritrade will say NTB or HTB. NTB stands for no shares to borrow. HTB stands for hard to borrow. So if it's HTB, that means you have to join TD Ameritrade's hard to borrow program in order to get shares to short, which means you're probably going to pay an additional fee to get those shares to short the stock. So again, if you look up on the top bar and it says ETB, that means it's easy to short, and the likelihood that the stock has a good day will be greater than if it says NTB or HTB. Now you guys are probably asking, why is it that a penny stock is more likely to have a good day if it shows easy to borrow? So let's go through the psychology of trading. So what we know is like 90% of the time, penny stocks end up pushing up and crashing on the day. So more often times than not, if they come crashing down, wouldn't you want to be short or bet that they're going to go down? And if that's the case, you would try to short it, right? Well, if majority of the penny stocks on TD Ameritrade are hard to borrow or unavailable to short, then you can't short them, right? But if you find one that's easy to borrow, think about all the traders, right? So just think a second. Let me go into enlarge the screen here, right? Look at my face. If majority of the time penny stocks kind of open up in the morning and come crashing down, that means 90% of the time all the traders see that these penny stocks go up and then come crashing down. So then they go, wow, I wish I could short it, but I can't because it's not available to short, okay? So then next stock rolls around. They look at it, a stock like MEET, and they go, oh my gosh, the penny stock is popping up and it's easy to borrow. I can short it. This is going to be that time where I get to finally short the penny stock that's going to come crashing down. And the next thing you know, it ends up just kind of going all day long, kind of ripping up. And that's because it's easy to borrow. So all those traders that typically can't short a penny stock now are able to short a penny stock, and they're just getting torn to pieces as they continuously get squeezed out of their position, okay? And that's really just it, ladies and gentlemen. That is all this video is about, is taking note on penny stocks that are easy to short on Thinkorswim. And when they pop up on the day, your best bet is probably not to short them because that's what the majority is doing. They're trying to short, and the play is probably long. So this is a great example of the stock MEET where it's easy to borrow, and since the day it popped up, it's continued cruising up. I will show you another stock very similar, which is ARDX. All right, we're going to have to look at this over like the past 20 days, maybe even longer. Okay, we'll look at it past 30 days. 30 days, 5 minutes. Okay, so if you look here, same scenario. Ready? This stock is easy to borrow. It pops up on the day, kind of comes down. Then it has this big candle right here. And that's because everybody was jumping in short, thinking this is just another one of those penny stocks that's going to fade out. Then it spikes, and then it goes on another run. Look at what happens the following day. The following day, it actually does kind of fall down. Falls down, but it doesn't fully crash. Consolidates, comes back up, comes all the way back up to the high here, and then it finally starts to go back down. Okay? So it's not that these penny stocks won't eventually start coming down, right? You can see it's still decreasing in value, decreasing in value, decreasing in value. But what you'll come to find is when there's a penny stock on Thinkorswim that's easy to borrow, it will more likely than not have a bullish day the first day. And then the following days, it will more likely than not have a slow grind down. What we know is most penny stocks fall very fast and very aggressive. But when they're easy to borrow, they take a lot longer to come back down. And more likely than not, it's because of the psychology behind the trades. Everybody who can't short ends up shorting, and then they end up getting squeezed out. Ladies and gentlemen, I hope you guys liked the video. And if you guys have any questions, feel free to put them in the comments section below. I'd love to hear what you guys think on the video, and if you guys have any questions regarding the video. And as always, thanks again for tuning in, subscribe, and like the video, and I'll see you guys on the next one. Take care.